Hello everyone, welcome back. I got some really good ones for you today, but first, I hope you've been having an awesome week so far, and if not, hey, hang in there, keep going, things will get better. Let's dive right in, shall we? Markets. All markets across the board, especially tech stocks that don't pay a fat dividend, commodities that compete toe-to-toe with the dollars, they've been getting smashed this last few days following Powell's remarks at the Jackson Hole Symposium, where he came out a little bit more hawkish in his rhetoric than markets are anticipating. I think the big thing that is really freaking out the markets these last few days is this whole notion that Powell is sounding and appearing rather convincing and telling everyone that not only does he want to get the interest rate policy back to neutral, but into positive territory. Hey, to do that, that implies that he wants to get that Fed funds rate above the inflation rate, Volcker style in the 1970s and 80s, effectively breaking the back of inflation. If inflation is like 10% that year, but you raise the interest rate to call it 12%, you're giving the dollar a 2% positive yield, and that sends risk assets tumbling, especially those risk assets that don't rely on fat divvies or those risk assets that want a weaker dollar like Bitcoin or gold, want lower bond yields. The NASDAQ, Bitcoin, gold, oil, squishmallows, pencil eraser prices, they like lower bond yields, lower interest rates, a weaker dollar, higher inflation, and Fed's just pretty adamant that they're not going to allow it going forward. They're going to just keep raising interest rates. I'm not convinced. I'm not freaking out, especially because in 2015, the Fed was like, okay, here we come to raise the interest rates following the 2008 crisis. Yeah, they raised them to like 1% and then had to cut from 1. I know they've raised a lot more since then, and we're at like a 2% rate or a 2.5% Fed funds rate, but against the backdrop of what, double-digit inflation. So even if the Fed follows through, I said this in the last video, with getting the Fed funds rate back up to 4% by the end of next year, even if the Fed comes in with a 75 basis point hike at the next meeting and then a bunch of baby bumps going into next year, I still don't think it's gonna beat up markets or inflation as badly as everyone's saying, because inflation is just already that bad. You'd just have to be so much more aggressive, and not aggressive in your rhetoric like the speeches you give at Jackson Hole and how potent those are, but aggressive in your actual follow through of policy. So unless Jerome Powell is planning on doing a 75 basis point hike at the next meeting, followed by 75, 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 well then they're not going to break the back of inflation. Realistically, I think they're going to do a 50 basis point hike at the next meeting, then in 25, then maybe another 25, then maybe another 50. They're going to slowly get that Fed funds rate back to 4%. By the time it gets there, inflation for that year will still be 8, 10, 11%. So, markets are having to adjust to this whole idea that maybe we're ending this last 40-year credit cycle, and this bond bubble that we've been in for the last 40 years is about to end, and we're about to get structurally much higher rates and yields. I'm just not convinced. I think we're in a new business cycle, but not a new credit cycle, which means ultimately, I think asset prices, risk assets like the NASDAQ, gold, Bitcoin, and oil are about to just put in all-time new highs over the next few years. And we're going to find these rates and yields just not going up as quickly as the Fed has been promising. That's been the name of the game for the last 7 or 8 years. Hey, though, if you believe that that's changed, and you really believe the Fed's rhetoric, and you really believe that Powell is going to prioritize dollar strength and fighting inflation over the financial system, if you really believe that, then sure. Run for the hills, get your dollar suspenders out, sell everything and hide under the rock. But I'm not buying it. I'm not buying it because Powell says things all the time, like a speech he gave not too long, it was like 2 speeches ago, I remember specifically him saying, our policies at the Fed ultimately affect the financial sphere and the financial sector, which ultimately affect the economy. So this idea that Powell is going to go around the financial sector and just start helping, quote unquote, the economy by fighting inflation and boosting the dollar, and just leave the financial system sitting there, dying, withering, crashing, and then I just don't buy that. I think the Fed's priorities are to serve the beast system, the 401ks, the pensions, the Ponzi, and maybe pretend like they're going to give you a little bit of dollar strength, but in all reality they can't. And that's the other thing. If the Fed really gets too hawkish with raising interest rates, they sound like they can and they will do it, and it's just going to solve inflation, and there's no negative effects from doing this. But the reality is higher interest rates would bankrupt the government, borrowing all this money from the Federal Reserve to begin with, bankrupt a bunch of other countries' central banks who are having a very hard time tightening their own conditions. So if the US is tightening further up the global Ponzi quicker than they're tightening their monetary conditions, say in UK or Germany or Japan, it's just gonna kill those other economies in emerging markets, that much faster. So this whole interest rates are going up, get used to it thing, only if the Fed can somehow continue to inflate its balance sheet, keep the debt-based monetary system, fed, and maybe by raising the overnight lending rate from banks, the markets could withstand it, but only with other assurances in place, like the Fed balance sheet doesn't get rolled off. We continue to expand credit one way or another. That's just kind of the debt-based monetary system, okay? The debt-based economic model requires that more and more be borrowed into existence in perpetuity just to remain where you are, never mind additional growth or productivity. No one's going to go on TV and say that to you, but that's just kind of the reality of it. So if the Fed doesn't step in, pivot, become a little bit more dovish, then yeah, I would expect air to continue to come out of these bubbles. But it also doesn't freak me out too much because the Fed is just that firmly in control of the air coming out of the bubbles. If the bubbles were bursting from like some black swan event, like real estate is just crashing because of this weird unforeseen black swan event, well, maybe I would be a little bit more of a deflationist. But this whole idea that the only reason the real estate market has fallen under such immense pressure this last 7 months is because mortgage rates keep rising, and mortgage rates are totally dependent on bond yields and Fed policy and QE, doesn't scare me, because whatever air is coming out of the tire, it just tells me that the Fed can put right back in. And boy, will they, because as I've just discussed with you, the debt-based economic model and system necessitates that. So this whole, don't worry, we're going to tighten, fix inflation, we're going to raise interest rates, we're going to raise bond yields, and we're going to help out the dollar and fix inflation, and it's all good, don't worry, we'll have a soft landing. Not really. We're going to really have a hard landing, which means the Fed is tightening into a slowing economy and then like over tightens and the markets just completely implode. We're in for a hard landing unless the Fed wants to make it soft. And all the Fed has to do is cry uncle one of these mornings, start pivoting just in their rhetoric, and then ultimately taking some of these interest rate hikes off the table, and markets will begin to reinflate. And maybe you're thinking, okay, so when does the Fed flip dove? If I know that eventually the Fed will have to flip and become more dovish and less hawkish than they've been acting this year, when is that going to happen? Dow 25,000, Bitcoin 12,000, is that when the Fed's going to flip? NASDAQ 10,000 or 9,000, is that when the Fed's going to flip? I don't think the Fed's even going to wait that long. I think Dow Jones 30,000 is kind of the point where if you fall back into the 20s, the markets are like, and then the Fed has to step in. So you've been seeing all year how markets have been moving based off Fed expectations and little off of fundamental developments in the economy. When the economy weakens, the markets might take that as, well, Fed's just going to be more accommodative, so risk assets go up. And if the economy gets stronger, the markets might anticipate the Fed's actually going to become more hawkish, than they have the wiggle room with a strong economy in the backdrop to raise interest rates. So maybe risk assets go down. So abandon this whole, I need good economic news for markets to go up and I need bad economic news for markets to go down. That is just like a total psyop. Prices are just prices, and markets are just trading on expectations, and those expectations have all been almost exclusively centered around the Fed this entire year, and I don't expect that to change. So Powell was more hawkish on Friday than I anticipated. I will agree with that. And clearly the markets weren't ready for that level of hawkishness. You know, they've been falling under a lot of pressure since Fed Chair Powell promised to raise interest rates on Friday. But when does Fed Chair Powell flip? And as soon as markets think he is about to flip, those risk assets are already going to be bottoming and reversing. That's why bottom calling is just so freaking difficult. But do you think the Fed will turn things around at Dow Jones 25,000? Bitcoin 12,000, gold 1,500, crude 85. Do you think that's when the Fed is going to flip, or do you think they're going to start flipping now? I think they're going to start flipping sooner rather than later. Dow Jones 25,000, I don't think the Fed wants to let it go down that far. So I would say, now that the Dow Jones is hanging out around 30, we're all just kind of looking at the Fed like, dude, at least float out one of these Fed presidents like Kashkari or Kaplan or Mester or whoever, or even Yellen, to say, maybe we'll do a baby bump at this next meeting, and the market's just going to love that. So markets are trying to price in a 50 basis point or 75 basis point hike at the next meeting. And we'll probably get that. I think we'll go 50, even though 75 would be needed. We'll probably go 50, and then, we'll just keep those those baby bumps going, but just keep expanding credit, keep the Fed balance sheet inflated, and just inflate or die. That's kind of how I see things playing out. I like Bitcoin here at 20 because the institutions showed up in October 2020 around Bitcoin 17,500. So short of Fidelity, Morgan Stanley, BlackRock, JP Morgan leaving the room for good permanently because they see no future in Bitcoin, no future in Web3, smart contracts, DeFi, NFTs, metaverse, then Bitcoin, could be, and cryptos could really be dead for a while, especially if the 10-year yield keeps moving up, rates keep moving up, and the dollar keeps moving up. But do you think that that's going to happen now that all these institutions have just, woken up and smelled the coffee about a year ago? Now they've all set up shop and they're making the markets for these things. Do you think this is the point at which, we're at a top and we're crashing, or this is probably a low because it's the price at which they showed up at initially in 2020? I think that this is a low, just my opinion. But I see that, 17,500 to 20,000 for Bitcoin as just extremely strong support. And I think it would take a ton of aggressive rate hikes, some sort of black swan, some sort of massive dollar bid and market crash to get Bitcoin like below 15,000. Could happen though. Like if the 10-year yield were to hit like 5.5% or 6%, to me that could put Bitcoin at like 10 or 12. But a lot of people are saying Bitcoin's going all the way down to 12. So wait, I just don't see it, because to me that would involve all the institutions also leaving the building, and they just showed up, set up. They've brought crypto and Bitcoin into their fold. Bitcoin and crypto are now trading on interest rates and bond yields and more or less developments in the eyes of the players at the table in the finance and banking and economists, right? So Bitcoin's kind of been brought into the fold, and I think these institutions are going to stick around, and I think there's a lot of constructive application for some of these, even altcoins, right? So I look at altcoins as highly speculative tech stocks that are non-registered securities and kind of rebranded. And then I look at Bitcoin as kind of like a digital gold. So I almost want to say that altcoins have more in common with the NASDAQ and Bitcoin has more in common with gold than Bitcoin and altcoins have in common with each other, but it doesn't look like that in the price action. in the way they trade. Those speculative altcoins just kind of follow Bitcoin right now on about 3 to 5x leverage. So a 1% move up in Bitcoin is like a 3 to 9% move up in altcoin. I do like some of these altcoins though, like the metaverse, Web3, smart contracts, oracles. I was just taking kind of like a little online course that Chainlink Lab provides on YouTube around their oracles and smart contracts. Really interesting stuff they're developing, kind of automating different industries potentially. This is not Bitcoin type stuff, all right? Like what Chainlink Labs is doing, so like that altcoin Chainlink, that is so far from what Bitcoin is, but I think both are great potentially. So as Chainlink uses smart contracts or oracles to feed real world data into blockchain technologies, and Chainlink has to pseudo quote partner with everyone because everyone's using their oracles, I think that that's really constructive, and I kind of like not a buy or sell recommendation though. I'm telling, these are non-registered securities. Chainlink could just poof overnight, but I like some of these altcoins. Maybe some of these altcoins that are boasting really fast transaction speeds, like we're able to process, this many thousands of transactions a second versus say Bitcoin, which is quite slow and quite clunky. I will say though, for Bitcoin being slow, clunky, legacy technology and outdated, I love it, and I still understand why it stays #1. You want your Bitcoin to be non-constructive. There are altcoins that I want to have, a real use case and application, but I like my Bitcoin to be stupid because I like it to be a store of value that's just a completely decentralized network. I like my Bitcoin to be kind of like gold. If people started to make changes to Bitcoin, or Bitcoin got brought into the fold of one group or another, that would be super bad, I believe, for Bitcoin. Bitcoin revels in no centralized control, and arguably Bitcoin's the only cryptocurrency that achieved all of the things you would look for in a completely decentralized monetary system that uses a simple ledger and allows everybody to possess a copy, and all those transactions to be transparent, so, and owned by nobody. So I think Bitcoin is really awesome, even though it's expensive. It is mother, the altcoins will follow it. But remember, those altcoins, it's not like altcoins are trying to replace Bitcoin. It's not. And even when those altcoins are launched and founded, the 99.99% of the time, the founder isn't trying to uproot Bitcoin or replace Bitcoin. The founder is trying to integrate blockchain technology into the metaverse, or like with Chainlink's oracles, feed real world data into blockchain technology, or smart contracts, right? So you have contracts that automatically execute whenever certain parameters are met, reducing counterparty risks and reducing the amount of middlemaning you need. So I see a lot of application for altcoins. Pick wisely though. Most are flaming hot garbage. 99% of them are going to go bust, but things like Chainlink Labs, Solana, Avalanche, Cardano, Decentraland, Engine, ADS, VRA, so Veracity, Ultra, yeah, the list goes on and on and on. I like these things. I think they're really intriguing and cool. I know they're very speculative, but it's the future, okay? And these institutions I don't think are gonna leave. So I think Bitcoin is closer to a floor than a top, and I think it's worth looking at Bitcoin. I like Ethereum too, in the Ethereum ecosystem. We've touched on some of those. Ethereum at around 1600, and we pulled back from 4,000. I mean, when things are down 80-90%, that's pretty much a textbook crash. And then the only question you have to ask yourself is this dead and never coming back? And if the answer is no, it's not dead, and yes, it probably will come back, well, if you're trying to buy low and sell high, they're certainly not in a speculative frenzy right now, or a bubble, so there you go. But tread carefully. It's not for everybody. I like Bitcoin though. I like my Bitcoin dumb and clunky and legacy. It's mother. It's the the cornerstone, the keystone for the entire crypto space. I don't see that changing because $1 to $2 trillion networks are extremely difficult to displace, and Bitcoin just continues to do its job. So liking Bitcoin at 20, liking some of these altcoins now that they've crashed 80 to 90%, tentatively bullish the NASDAQ, oil, gold as well. And we're just gonna have to see how much more hawkish the Fed gets, which would be really bad for these things we've just discussed, or how much more dovish the Fed will get over the next few months, which would be wonderful for the prices of these asset classes. If the Fed ultimately tones down their, we're gonna raise interest rates and stop inflation and we mean it, you know, I think these risk assets are gonna do really well and move to the upside, start recouping a lot of their losses. And if, you know, the Fed chills, kind of starts coming out being like, you know, we're gonna do one more pretty big one and then kind of be data dependent and see where we're at, and you know, they can just kind of start acting a little more chill and dovish, and then the markets just start to climb that wall of worry and move back up again until the next inevitable serious conversation we need to have around normalizing interest rates. And the whole normal versus abnormal interest rates, well, these are Yellen's words, not mine. Yellen would consider today's interest rate policy abnormal. She talks a lot about normalization, but, and I've been waiting like 8 years for this lady to normalize interest rates. So I don't necessarily see it happening, but hey, maybe I'm wrong. And maybe a new credit cycle is being born right now. A new 40-year, you know, credit cycle will happen after these interest rates skyrocket this year and next year, and these bond yields skyrocket this year and next year and just crash everything, and then we just totally reset everything. But I don't see it. I think we're in a new business cycle, not a new credit cycle. And I think, you know, it's just gonna be kind of more the same you've been getting since, I don't know, forever. Right when risk assets are 20 to 30% off their all-time highs, the Fed kind of flips more dovish, those things go back up. The Fed jawbones about fixing inflation, maybe downplays inflation, you know, any way they can, you know, tries to play up the economy any way they can, and we just continue to kind of muddle forward. Economic data is weak. Financial system's trying to tighten. That's a dangerous combination of things. But if you're trying to buy the point at which the least amount of people want a security, well, that's when demand is at an all-time low. And man, I just gave you 2 good reasons why nobody's sitting at the table. So if you're trying to buy low and sell high, hey, just food for thought. And then when a security is at the high point on the chart, that's the point at which the most amount of people want it. And if you're gonna make good money speculating, ideally you're buying a security when, or asset when the least amount of people want it, and then you're selling when the most amount of people want it. And with that being said, right now with a tightening financial system and weak economy, nobody wants anything. Nobody wants anything except dollars for a crash, but while they're sitting on their cash, which they claim as a position, it's just getting decimated by inflation anyway. So crazy stuff going on. Do what, you know, I'm just telling you where I'm at so you can make the best possible decision for you. I hope this just kind of frames everything for you and gives you some food for thought. One more thing and then I'm gonna let you go. I wish I had done a video about nuclear like months ago. In 2020, Bill Gates, vaccine salesman Bill Gates, became very bullish on the uranium and nuclear, invested a ton into nuclear. So I've actually been watching the uranium market pretty closely since around 2010. I was investing in large cap uranium stocks right up into the Fukushima disaster, and I had some of those positions go all the way down into a nasty 9, 10, 11 year bear market. Fukushima's kind of in the rear view mirror. It's been about a decade. Low key, all the players and the elites know we need to diversify the energy portfolio, kind of get away from, you know, fossil fuels. I know nuclear is kind of controversial. You got those people, and I see both sides of it. On the one hand, it's extremely, extremely clean. When nuclear is working correctly, extremely clean. The problem is it takes a very highly specialized and regulated society to kind of make it work, and then the systemic fragilities and risk, right? Like every nuclear reactor is quote unquote meltdown proof until the shit hits the fan, right? So, but I am tentatively bullish on uranium. I would stay with, like, not a buy or sell recommendation, but if you're gonna look to invest in the uranium or nuclear space, it's, first of all, it's a very small space to begin with, a very small basket. There's probably only like 15 or 20 publicly traded uranium mining companies on the planet, and then of that, probably, you know, only half of those are even listed on a major exchange. So a very small space, which means that when any amount of institutional investor show up, it's like, you know, it's like a garden hose. It's like a ton of institutional money just trying to fit into this really, really tiny space. So you don't really even need to speculate, in my opinion, too crazy. Like no penny stocks or pink sheet traded weird stuff. Like personally, I would never do that. Not a buy or sell recommendation. I would just stick to like large cap uranium producers. Buy those on the dips, maybe, or don't, avoid them, and just kind of see where it takes you. Also bullish on oil though, so nothing's changed there. But I do sense there's kind of like this stealth bull market going on in nuclear right now, and I think we're far from the blow off top in a nuclear bull market. So, you know, potentially something worth looking at as that space continues to kind of put in higher highs and higher lows, kind of like, you know, that's becoming a trend these last couple of years. So you could look at the uranium space and nuclear. You can look at oil. I do like WTI crude right now is about 90 a barrel. I like the large cap, mega cap oil producers, pay good dividends, and yeah, I think that's the way to go with oil, is just the large cap stocks. So like ExxonMobil, Chevron, like BP, you know what I mean? You could put in some Halliburton if you wanted. So, and then for uranium, not a buy or sell recommendation, but I've watched Cameco pretty closely over the years, stock ticker CCJ, based in Toronto. They used to have about 20% of the global uranium supply. Now it's like 7%. So they've given up quite a bit of market share, but hey, potentially a solid large cap uranium stock, does pay a dividend, has been around a long time, pretty safe and stable jurisdiction of Canada, like they're headquartered in Vancouver, I believe. So you can look at CCJ, Cameco. I'm sure Bill Gates has bought some. I can't prove that though. I'm not, you know, I don't know. Okay, so I'm not sure. But when the elites are like, hey, I think that uranium is bottomed and I want to like pick the best companies for this coming bull market, they're probably going to stick with the large cap stocks that are listed on major exchanges. So the uranium, the other yellow metal, definitely worth taking a look at. You don't have to get weird with it. Buy on the dips. You know, mining stocks are generally pretty horrible investments, and maybe I'll do an entire video on that. So whereas I do come off a bit like a commodity bull and an anti-dollar guy, I sure don't like the mining sector. I'll probably do something on that, but there are some exceptions, right? So you could look at Cameco, and you know, I would say just like buy uranium, but then you'd grow like a third arm or something. So let's not do that. Let's just look at mega cap, large cap uranium producers in stable, safe jurisdictions with a long track record, and just kind of go from there. Kind of a long one today. Wow, time got away from me. Hope you're doing well. I'll be back next time. Anything weird happens or I get a chance, like, share, subscribe, whatever. Glad you could hang out with me. Thanks for your support. It's awesome. Have a great rest of your day and rest of your week, and I'll probably try to come back on Friday or Saturday. Till next time.